Good morning. It's the Video CPA back with you again. I'm Michael Scott. I am the Video CPA, and it's good to be with you. Today we're talking about electing S-Corp status. And some of you may not even know what an S-Corp is, but I'll explain that to you in this video, and then how to elect S-Corp status. So also, who can make the election, because there's some qualifications to be an S-Corp. So let's go ahead and get started. You'll see our marketing disclaimer here, educational disclaimer that you can read. And then let's talk about what an S-Corp is. Now, Wikipedia, if you believe in Wikipedia, actually has a definition of an S-Corp. And basically, they say it's a closely held corporation that will be taxed under subchapter S of the Internal Revenue Code. Okay. They also go on to say that an S corporation does not pay any income taxes, and that's true for most situations anyway. What that means really is an S corporation by itself is not a legal entity. Okay. It has a legal entity underneath it. And so the S corporation is a construct really of the Internal Revenue Service. So if you've got a legal entity, such as a corporation, and you want to elect S-Corp status, you can elect S-Corp status through subchapter S of the Internal Revenue Code. And what that means is you're taxed differently than what a normal corporation would be taxed. So it in itself is not a legal entity. It's got a legal entity supporting it, though. So it's like I say, a construct of the Internal Revenue Service. So you can't go to your Secretary of State and say, I want to be an S corporation, and they form you as an S corporation. What they do is form you as a corporation or some other entity that can be treated like a corporation, and then you have to elect S-Corp status. Okay. So the IRS has their own definition as well, and it's a corporation that elects to pass through its income and expenses, deductions and losses, credits to the shareholders of the corporation. And so we talked about a few minutes ago how it's not taxed very often, and it's not taxed very often. There are some special situations where an S-Corp might pay taxes, but in most cases, the taxes are passed to the shareholders of the S-Corp. All right, so it is a pass-through entity, a reporting entity. You have to file a tax return on it, certainly. And I have to tell you that an S-Corporation tax return is not always an easy tax return. So, in fact, it may be one of the most difficult tax returns that you would have for a small business. So we'll get into that a little bit later. All right, some qualifications to be an S-Corp. All right, first of all, you've got to be a domestic corporation or a legal entity that's eligible to be treated as a corporation. And I'll talk about that in a minute, okay? Also, there are certain shareholders that are allowable shareholders and some that are not. All right, certainly an individual is an allowable shareholder. Certain trusts, estates are allowable shareholders, but partnerships are not, and corporations are not allowable shareholders. Either are non-resident alien shareholders. So you've got to be a resident of the United States, be a shareholder of an S corporation. And you can have no more than 100 shareholders. So this is not a construct that is used by giant businesses in the United States. It's for small businesses, and it's a very good entity and a very good method to be taxed under for small businesses. But it's not for big businesses. Okay, so you're stuck at 100 shareholders, and you're also stuck with just one class of stock. Okay, if you're a small business, these things don't matter very much, but they do exclude big businesses from being S corporations. All right, and then there are some types of businesses that are not eligible to be S corps, and that would be certain financial institutions, insurance companies, domestic international sales corporations. Those are examples that are given by the IRS. So when you look at possibly electing S corp status, you need to look at what kind of business that you've got. All right, so filing the election is done by filing Form 2553. It's got to be signed by all shareholders on a timely basis. And it's got to be filed no more than 2 months and 15 days after the beginning of the tax year the election is going to take effect. It can be filed anytime prior to the start of that tax year as well. Okay. There are some remedies that exist if you're late with your filing, and so be aware of that, but it's better to file on time so you don't have to use one of these remedies. But this actually, I'm showing you the first page of the 2553. Actually, there's 4 pages to this form, and on the proceeding or the pages after this is where each shareholder would have to sign to agree with to be treated as an S-Corp. All right. Now let's talk about those other entities that are eligible to be treated as a corporation, and they also can elect S-Corp status. And I've seen this most commonly with LLCs. If you've got an LLC, you've got a good entity. It's a legal entity formed under state law. And an LLC can elect to be treated as an S-Corp for tax purposes. But they have to file Form 8832, which is an entity classification election. All right. And so what that election basically says is that, hey, I'm an LLC, but I want to be treated as a corporation for tax purposes. And then in addition to filing the 8832, you've got to file the 2553 to elect S-Corp status. So both forms are necessary if you're an LLC. All right. But there is a way to have an LLC taxed as a S-Corp, and we operated our CPA firm in the past. We've been an LLC that was treated as an S-Corp, and in my opinion, that was a good way to do business. All right, so let's talk about some of the advantages of S-corporations. One advantage is it does pass through the income to the shareholder, so it avoids double taxation that a lot of corporations have for some of the income that they pass through. You do have limited liability protection. That's not because of the S-Corp status, but it's because of your underlying entity, which is usually a corporation or an LLC. So that would give you limited liability protection in those cases. And the S-Corp, as an S-Corp, you can save income, save on income tax, self-employment tax, payroll taxes, if you know how to manage your S-Corp properly. Okay. Generally, the corporate income tax rates in the United States have been more than the personal income tax rates, and that may be the case again right now. They're pretty low. But when this income from an S-Corp passes through the shareholders, it's taxed at the shareholder rate. So the personal rate, it's personal rate. So it's taxed on your individual tax returns and not as corporate income. All right. S-Corps are also allowed to have retirement programs, insurance programs, accountable plans for expenses for both the owners and the employees, which makes it very flexible. You can almost do anything that a large corporation can do with it, and so that's very nice as well. And if you're a 1 or 2 person operation and you're making some money, and I would say, I wouldn't do this if you're not making any money. I wouldn't make the election, but if you're making $50,000 or more, for example, I think there would be a reason possibly to look at making this election and saving some taxes here and being able to operate some of these plans that are allowed for an S-Corp. In my opinion, the S-Corp, if you've got a business of any size, small business of any size, I think it's the best entity to use for small business. I like S-Corps. There are some disadvantages though, so let's look at some of the disadvantages. You have to remember that if you're a proprietor or a partner, you don't file a W-2 on yourself. You receive self-employment income, you make estimated tax payments, and you file W-2s for your employees of a proprietorship or a partnership. But if you're an S-Corp, you are an employee of that corporation, all right? And so anything that you take out that's not taken as a draw or anything like that, although some of it could be with an S-Corp, but you are an employee of that corporation, so you can give yourself a W-2. So if you're the only employee of that corporation, you're going to have to still file payroll tax reports on a quarterly basis. And at the end of the year, you're going to have to file a Form 941 and a Form 940, which reports your payroll taxes for the year. So there is an administrative burden, an additional administrative burden with having an S-Corp. You also have to file an annual income tax return for that S-Corp. And so that income tax return, like I say, these are difficult income tax returns if done right. And I would, if you're not experienced in taxes, I would not try to do these tax returns by yourself. I would get a seasoned tax professional to prepare your S-Corp return. There's a lot of things in there that need to be done, that should be done. I mean, they can be skipped in some ways, and the IRS may accept them, but it's going to come back to haunt you later on with your S-Corp if you don't do it right, okay? So S-Corps require good accounting. They require income statements, good income statements, and good balance sheets. But still, in my opinion, the advantages just outweigh the disadvantages of having an S-Corp. I mean, they outweigh all that administrative burden that you might have to put up with. So if you've got a pretty good business and you're operating as a proprietorship or something like that, I would look at switching to an S-Corp status. And we're telling you right now how you do that. Okay, so that's what we're looking at for electing S-Corp status, and very important to look at. If you've got a small business, I would look into it. I think it's a good way to do business. So thank you for watching. Appreciate it. If you haven't subscribed to the channel yet, go ahead and subscribe. If you need more information about taxes, or you want to take some tax courses or becoming a tax preparer, go out to the video CPA's Targeted Tax Training and take a course. We have a free course out there, actually, if you'd like to try one. So thanks again. Appreciate you watching.